For the VC infrastructure panel, investing in the bear market. So we know we are in a bear market right now. How many of you guys want to know great techniques from leading investors and how to invest in this bear market by show of hands? Let's see, anyone? Good, good. So for the moderator, we have Garland 1. He is the managing partner of Momentum 6. We have David Tsai, co-head of Ventures of Kronos Research. William Bao Bean, SOSV General Partner and Managing Director of Orbit Startups. Let's give him a round of applause.
How's it going, guys? Good.
Made it here in one
So
piece.
they gave us a bunch of questions today to kind of like go over like sample questions. I didn't like them, so I'm not gonna do any of them. So I'm just gonna make questions on the spot. But David and William, welcome. Why don't you give a quick intro about yourselves, and then we'll get the ball rolling.
Sure, Will. Why don't you start?
Sure. So William Bean, basically general partner of our fund SOSV, and then we just rebranded Mox and China Accelerator to Orbit. So rebrands suck, but we've been in here in Taiwan now for 7 years as Mox. So now it's Orbit because we are global, not just focused on certain geographies. But in terms of investment, we're not so much on the protocol side. Actually, our protocol investments are done through our D-Lab out of New York. For Orbit, it's more like crypto, fintech, crypto or blockchain, fintech, blockchain, media. And so started investing 2015 for crypto, fintech related plays. 3 died. One was BitMEX, the first crypto derivatives exchange in the world. And at that time, Bitcoin was around 250 per coin. And we helped them grow in the first 12 weeks from $250 a week in revenue to $11,000 a week in revenue. So 44x in 12 weeks without spending any money. And then they ended up not raising any money, just kept on going. So the founders still own 94%. There's been some drama since then. But they're still, the funny thing is that they went from #1 crypto exchange in the world by trading volume to number 17, give or take. But the revenues are the same, even still today. Yeah, so the market's grown a lot. So it's been a wild ride through the ups and downs, especially 2018. And then the last year has been a lot of fun.
Awesome. I'm David. I lead ventures for a company called Kronos Research. Kronos Research is actually headquartered right here in Taipei. We have about 100 employees, predominantly on the market making HFT side. I have 9 people on my team. So the market making business was started in 2018. Fast forward to 2022, we're probably one of the largest crypto market makers in the world, trading billions of dollars of volume on a daily basis. The ventures team, we've been around for less than 2 years. Since then, we targeted investments into infrastructure, into DeFi trading protocols, and very, very little amounts into, GameFi. With that said, my background has been traditional finance, investment banking, private equity on Wall Street for more than a decade, and made the transition into crypto in late 2020. Really interesting.
Late bloomer.
Really interested to see the progression from, I think when I joined, it wasn't that much of a bull market, and then it became the most ridiculous bull market ever, and now we're in, the midst of a bear market. So very, very interested to see the progression of that in less than 2 years.
Thanks. Those who don't know me, Garland, I manage a fund called Momentum 6. So we started out in 2020, pretty early. We're a pretty early fund, we got the whole wind of the whole DeFi summer. we were in every farm imaginable, in every single chain imaginable. So we're a pretty degenerate fund. We don't have any LPs. We just do whatever we want with our capital. So we also have a big research channel. I think it's one of the largest in the space right now that we just decided to make public during the bear market. So if you guys are interested, I'll kind of talk about that afterwards. But yeah, so it's been a year. 2022, we had Luna, Celsius, BlockFi. What else do we have? FTX, Genesis, Gemini. I think that's what it is, right?
Axie?
Axie, yeah, Axie wasn't, yeah. So, just to illustrate how bad the market's been, and, we have this new Binance fund coming up, Binance being insolvent, so, it's been a wild year. But obviously with that, a lot of the capital has left, a lot of the people has left out of the space, and with this FTX, I think a lot of people got hurt. A lot of the big players like market makers, big funds. So the investment landscape has changed a lot, right? Just to kind of get this ball rolling, how has your thesis changed from the bull market to bear market? If we compare 2021 to this year and going forward.
Yeah, I guess I'll start. I think the benefit of a bear market is actually weeds out a lot of opportunistic founders. Gone are the days where, pre-product, you look at a video and a gaming project is raising at a 400 million valuation with just a video, and that's about it, right? And you fast forward to today, where that gaming project is not doing too great, right? I think their tokens are down 99.9%, and I won't mention the name of that. The founders today in the bear market, typically, especially strong projects, are waiting to build through the market. They're not there to basically make a quick buck. And so what does that mean for investors in general? Like for us, when we're in the bull market, right, we actually weren't super concerned about, our investments, are they in tokens or are they in equity? Because it's a trade-off, right? If you invest in tokens, you can receive benefits of interim liquidity, offset against the guarantee of, getting access to future profits of the business, which the equity amount, gives you. In today's market environment, right, we're actually looking more for, okay, we kind of want both. We want equity to essentially have that guarantee, and then we want tokens because, if there is a potential turn in market conditions and we have liquidity in those tokens, right, it can help generate kind of like that interim liquidity to pay back some of the initial investments. So with that kind of said, the number of the number of ventures projects in general has fallen, right? But the percentage of quality projects actually, I think, has increased in a bear market. So it's an interesting dynamic, right? If we just look at ventures-based investments.
Yep, so we're kind of weird because no one works with us for the money. We invest very small checks. We take relatively a lot of the company, and it's just both equity and tokens. And the tokens are for our program. So actually, when we talk to founders, we say it's a pretty shitty deal. Here's why you should take it, but you should only take it if we can be of help. So in a bull market, most of the founders don't take the shitty deal. So usually during a bull market, we're not actually investing, we're fundraising. And then when the last year is actually a lot of fun for us because then we can invest again. Because the valuations come down to the point where we can actually be involved again. We take about 5% of the company and of the team token, which is a lot, considering we invest 180K and we keep like 50K of it. Yeah, so it's 130K. That's what we did with BitMEX. So we'll continue to do that all day long. But during a bull market, that's very, very expensive. Right? So for us now, we just got very active over the last year. And we've done about 8 or 9 new investments, whereas the last cycle, it was the end of 2019 when we did like 4 in crypto fintech, and then 2021 we just helped them grow. Now we're back. Well, for the last year we've been back. and then we'll see what happens next year. But for us, it's been really exciting because we can invest again. And then we're all about traction first, fundraising later. Yeah, it's build through. I don't think anybody has a choice except to build through.
What about like just I guess like you guys talked about kind of the investment mediums where tokens and like what you guys do operationally, but what about the overall thesis, categorical investments? Because obviously, market's going to be a lot different, with the CFI risk, with the regulation risk, with custody risk. I think, liquidity will be a lot more scattered from now. Lending in, borrow, all that needs to be rethought as well. Like we can't have these guys just, circling all the yields from 8%, 9%, 20% to just crash at the end, right? Because like, there's a saying like if you don't know where the yield's coming from, you're the yield, right? And like we all kind of found out that we're the yield in 2022. So like we need to rethink a lot of these theses. Wondering if there's like a categorical kind of like rethinking of some of these investment theses.
Yeah, maybe I'll start with this, right? Like in a bull market, if you ask a diversified investment shop, right, is 50% return good, right? They'll come back to you and say like, we don't want to hear 50% returns. We want to hear 5x. We want to hear 10x, right? That thing has totally changed now in the bear market. A lot of it is really protection of principal. It's like, great, okay, you farm on Anchor with UST, you get a 20% yield, but what happens to your principal? And what is backing UST? Well, there's no real defined, backing except Luna, and then it's a death spiral to infinity, right? A lot of people in a bear market, right, first and foremost, are thinking of protection of their initial investment, principal investment. Gone are the days of expecting, a 5x return, right? And now, and I'll just give you, I'll just kind of like give a back take on this, right? In 2021, Kronos as a market maker did very well from a percentage return basis, but we could not compare to some of the larger diversified investment shops, which I won't name, and some of them may not even be in existence, right? Because those shops made a lot more multiples of capital, right? But the bulk of Kronos' strategy was, market making HFT, which is a delta neutral strategy, which means we're not correlated with market movements, right? You fast forward to, 2022, you look at some of the other firms that engage in the risky practices, right? And you see a lot of them potentially going down, like losing a lot of money, or if they undertook a certain amount of leverage, they basically exploded and they're no longer in existence. And whereas if you look at kind of Kronos Research, we're still making profits, although the profits in 2022 they're a lot less than 2021, but we're still profitable. So that kind of just shows you where the sentiment and the risk has shifted. In terms of new investment vehicles, I think there's two investment types that we as a fund were thinking about. One is really in distressed investing. So what is distressed investing? Binance announced, they wanted to partner with a couple of folks to create this industry relief fund, whereby I think Binance had 1 billion of capital, and the remaining 7 partners had 50 million of capital. To invest in projects that were needing help in this market environment. Proud to announce that Kronos Research is one of the 70 partners. And that's something that we'll be looking into, right? Distressed opportunities. So what are distressed opportunities? It'll be for established projects that may have held some of their runway on FTX that are in trouble. And now, what would we get in terms of injecting capital, right, into this distressed business? Well, it could be equity, but do we think equity in this market environment is a little risky? So then it could be a structured instrument. So now, you're introducing some, traditional finance concepts, right? Like let's say that, I want the benefit of principal protection by investing in the capital structure at a more senior level than common equity, but I also want the ability to make multiples if it does really well. Well, maybe it's a convertible, equity instrument, and that's kind of what we're thinking about, and I think some of these instruments will be offered, right? So that's kind of on the distress side. The other angle that we're thinking about is really secondary market investments, right? you know, in the bull market, you look at the token values and all of this stuff, right? From a fundamental perspective, you're scratching your head and you're like, well, like, these valuations make no sense, right? From a fully diluted value or from a market cap value. But nowadays, right, you're coming to a point where there are certain tokens that, for example, like, you know, we were looking at a token the other day where the size of their treasury is higher than the fully diluted market value of their tokens. So that becomes something interesting. But then, you know, we start asking ourselves, right, well, the tokens don't really represent the equity of the business. If it did, then that would be a clear buy, because from a fundamental perspective, it's undervalued, right? You know, founders can dictate what they want to do with the tokens. So that's another layer of analysis that we're all thinking through just to give you guys, you know, a little bit of knowledge into how we're thinking about things.
Yeah, so we're very, very long term. So 10 plus 3, 13 years. So we're investing in, you know, platforms and tools. It's sort of like pick shovels and blue jeans, not gold, right? So we're looking at building block technology that can allow, for us, what we're looking at is bridging kind of like normal people with blockchain. And so, you know, a couple of examples there. I mean, you don't see a lot of really cool stuff out there yet, but a lot of brands are very interested in, and we run innovation for Unilever, J&J, AB InBev, P&G, Nestle. They're very interested in having a direct one-to-one relationship with their consumer. They're very sick of big internet being in the way, being in the middle between them and their customer. And one way you can do that is you know, build that one-to-one relationship is through NFTs or something like that. So there's a huge amount of interest from their side, but they don't know how to do it. Is this a 1 year, 2 year, 3 year opportunity? Maybe 2 or 3 years down the road, but there is actual revenue to be had there, and there's a function of being a bridge. And for our Mox ecosystem, what we do is we take, you know, our large corporate partners and our startups, and we bridge those two together, right? So we hit about 50 million monthly active users in 2020 with a customer acquisition cost of 0, because China Mobile and Samsung and Xiaomi were giving our portfolio companies free advertising. And then that hit 103 million MAU at the end of last year. Now we're at 153 million MAU. So we got all these consumers on one side. We got brands on the other. And then we've got a technology that theoretically can connect it to in a privacy compliant, sort of a potentially decentralized way. How is it going to work? Well, it's probably going to take 10 plus 3, 13 years. So that's the one side. How do you bridge kind of like traditional world of Web 2 with Web 3 with traditional, you know, sources of revenue? And then the other side is how do you use blockchain technology to disrupt traditional finance or change it up? So one of the most boring industries in the world is insurance, but it prints money. Well, except if you're in Florida, storm insurance. But you know, most real insurance companies don't insure Floridians. But insurance just pays out a lot. On average, it pays out like 60%. Right? Insurance companies just print money. Reinsurance companies print money. So one of the companies we're doing is we're opening up reinsurance to anybody. So it's DeFi reinsurance, but it's actually one of the founders lives here, Marco from Insuro. But you're basically opening traditional insurance, like normal, everyday insurance policies, but it pays 19% a year. 19%. That's industry standard. 19%. It's a standard, normal, like travel insurance, right? And so, if instead of keeping your crypto in your hard wallet underneath your pillow, you know, you can stick it in this thing, and it has no exposure whatsoever to the crypto markets. It's just pure, traditional, licensed reinsurance. And so it's super boring, but it's not just capital preservation. You actually get a return. So we invested in this over a year ago.
What's the risk on that then? So if I put my capital vehicle like that, is the risk that the company might not be able to fully collateralize?
So it's parametric insurance. So if all the flights suddenly become late across the world,
So like pandemic.
no, but it's in real time, so you can stop it anytime you want. But if I don't know if there's some sort of electromagnetic storm, and it's basically if all the insurance models are wrong around how often flights are late, then yeah, you might be in trouble.
So there's two sides to the insurance business. The first side of the insurance business is, you have claims that pay premiums, right? The other side of the insurance business is on the investment side. Insurance businesses are not completely risk-free because on the investment side, if you do something wrong with the investment, you're kind of
Yeah, sorry, that's not this. This is parametric. This is like travel insurance or flood insurance
I see.
or like wind insurance.
okay.
It's connected to an oracle, and it pays or it doesn't pay based on wind speed or water level or the flight being late or not. So it's different than, if it's the investment side, no, this is much different than that.
Okay. I think that kind of leads to the question that I wanted to ask, which is, I think everyone's either sitting on cash or like getting drawdowns on their Bitcoin or Ethereum just like all year long, right? So not a lot of people, I mean, what is safe asset right now? So like no one really knows what the safe asset is. So I'm wondering from your perspectives, what do you do to find alpha in this kind of market? Where do you find it, and like how do you find it? And what are some of the examples of some of those alpha that people might be able to, deploy their capital into?
So, I mean, I'm early stage VC, right? So what you were saying before you couldn't get into the good projects. Now you can do your work. You have plenty of time, and you can figure out who the best teams are, and you can actually invest in them. So, I mean,
What are some of those projects that, like, what are some of the categories of like those projects that you're seeing right now? Like strong, like is there like category or is it pretty, like random across the board?
So for us, it's pretty random across the board. But for instance, there are 10,000 agencies with a tech stack going after brands, right? Who want to serve brands. I mean, I met at least 15 of them. But now you can, after meeting 15 of them and then talking to the brands and then seeing what they've done already, we can actually pick one and be relatively certain that this is the right team based on what they've already done, not what they want to do, right? And we might be wrong. I mean, we're early stage investors, but you have time, and you can actually get into the best projects. So now is the time to invest in projects. That's what we did. So normally we're number 4 most active VC in the world, but the market's been shit for the last year. So now we're the number 2 most active VC in the world because we actually are the same where everybody else took a break. Now, as going into next year, we're probably actually going to be taking a bit of a break. But we're closing 10 investments right now, and we need to get it done by the end of the year before our back office goes on vacation. And they're in Ireland, so we're really working hard right now.
Yeah. So in terms of alpha, you can say ventures, early stage ventures. That's what we've always been doing, right? And I think that in terms of the number of deals that we invest in every single month, right? That actually hasn't really dipped. Although we can't really see a statistic because FTX only happened a month ago, right? So I'm curious as to see if that will impact the number of investments that we do. I think in the near term, I think in the next, the weeks or the months, right? Venture firms are very cognizant on valuation because we're unsure about like where the fallout will be. And whether or not there's going to be major remarkings, right? Every single day is like another obstacle, right? Like, there's FUD everywhere. I think Garland mentioned now there's like Binance FUD. There was Genesis FUD, USDT FUD, all of the FUDs that you need to avoid. And ultimately, you don't know until it's, the time for, an announcement. There are a lot of companies out there saying, we're fine until the very end. So valuation is is an interesting component of this, right? Another thing really is you have to understand if the team is there for the long run to build throughout the cycle, right? Are they raising enough for a long enough runway to potentially ride out this bear cycle? How long is this bear cycle going to last for? That's actually the magical question, right? Like, the answer is, there's you can allude to multiple different comparisons, right? This crypto bear cycle is unlike any other bear cycle because it corresponds with a traditional markets bear cycle. It also corresponds with unprecedented geopolitical risk. What's happening in Russia, China, etc. How are we going to weather through this is a very good question. But outside, I agree with William that early stage ventures, if you're betting on the founders and you're betting on this market, right, there are definitely opportunities, and I do think that the opportunities lie in agreeing with what William said, right? Opportunities lie in the people that can add value, the strategic partners, the ones where we don't just invest and forget about a project, the ones where we invest and we're like, well, what do you need, and then we'll try to help you out with that, right? I think that's one of the benefits of being a part of a broader ecosystem than just a standalone venture fund, where we can leverage resources of our ecosystem. So that's important as well. But I do think stemming outside of ventures investing, within crypto, I mentioned distressed investments as another generator of alpha. I mentioned investing in the secondary markets, right? Outside of crypto, even, right? You can think of real assets, commodities, right? To really protect yourself against inflation, really downside protect yourself, right? Things like those type of assets.
So we have about 4 minutes left here. I want to hone in on this a little bit more because I feel like I still haven't got the answer for it. So for our fund, things that we were focusing on after, especially FTX, is that custody is a big thing, right? So custody is one of the I think biggest players that's going to be in there because of all this unsafety, systematic risk, and all of that, right? And I think Cumberland posted this amazing thread on how the crypto market might look like the FX market, where you have various different custodies and with their independent collateral, and then you have OEMS systems, trading systems that kind of connect all these custodies and different capital pools into the same market, FX, right? In this case, crypto. So it's one of the theses that we're kind of working on, and we're looking heavily into a lot of these alternate custody solutions that might be more cheaper for retail, guys that are charging $2,500 per month or 10 basis points per asset, right? So those are the things that we're looking at. We're also looking at a lot of these depressed ecosystems Solana, Near, a lot of these guys that didn't really have or came down from their high, and everyone's fighting right now, but have a very strong community underneath. So seeing kind of what investments we can make into those, as well as a lot of NFT projects that have been really gone down heavily, so that we can and we see what's happening with rather their token model, so things like that, right? Our thesis has changed drastically from investing into GameFi or investing into every other DEX that's out there on every other chain, right? So I'm wondering for you guys, if you have examples of those kind of projects that you're kind of looking forward in terms of 2023 and 2024.
Yeah. So one difference I would say is our thesis ever since the inception of the fund has been more for, hey, if people build something, what would it look like in a 3 to 5 year horizon? How would this protocol kind of generate, run rate revenues, right? And with that, right, we've always focused on infrastructure. So just to give you an example, one of our first investments that we made was into a layer 2 custody provider named Kronos. And so one of the benefits of Kronos, at that time, is basically promising, well, in order to onboard onto our custody solution, you need to KYC, but everything is fully decentralized, right? No one actually has access to your private keys. And you kind of really like this. I really like this thesis because at that time I thought the world was kind of going into two pathways. Right? One is a decentralized world, and another is kind of like a centralized world. right? And institutions that want to onboard that also want to ensure nobody else has their private keys is going to find Cradle to be a very, very interesting solution, right? And so even with that in mind, in the height of the bull market, which is, well, at the start of the bull market, I'm sorry, that was February, March 2021 timeframe, right? We were already thinking, this is an infrastructure component that's needed, that's necessary. However, during the bull market, right, you cannot help but add in some, theses. For example, well, what about GameFi? You look at the success of Axie, at least, the interim success of Axie at that time, and you're allured into, okay, well, what are the applications that you can do within gaming in Web3 that can really be interesting, that can actually create a gaming ecosystem and generate run rate profitability for a game, right? We looked into that, although we were very, very selective. We only invested in one gaming project and one gaming build, so very limited in terms of our allocation, but at least looked into that. But now, when we're kind of looking into a bear market, right, we're falling back onto the initial fundamental thesis of what we were trying to build, which is invest in fundamentals, right? Invest in things that our ecosystem can support. So, for example, and Victor was just up here, right? We invested in Hashflow at a very early stage, and we helped them because we're market makers for them. They're basically a DeFi trading protocol that plugs into a central limit order book, and we're very good at doing that, right? So, things that our ecosystem can help, things that are creating something that people need, things that can generate a run rate profitability for the future, are items that we look at, right? And it'll be it's what we looked at in a bull market. It'll be what we look at in a bear market.
Thanks. William, you got 30 seconds.
Yeah, so we're still looking at the sort of boring shit that makes money, right? So these are deals that we did end of 2019, early 2020. So one is just a SaaS platform for traditional institutional banks and financial institutions to deliver crypto solutions to their clients, called Atto out of Thailand. The funny thing is Fidelity just launched crypto, and if my parents are getting tons of Facebook ads for Fidelity crypto now. So while you guys might be hiding under a rock, or there's a lot of people who are still somewhat getting hit with advertising. We're still not totally mainstream yet. Second one is Coverio, fully Swiss licensed prime broker, but like a traditional prime broker, like a Goldman Sachs or Morgan Stanley white glove service with sales trading, research, custody, where you can just call up and say, give me 10 million Bitcoin at this price, and they'll spend 4 hours trying to fill the trade to get you the right price, but then you get paid a commission. And then, I don't know, I guess the third one would be Vega X, which is basically really super boring shit, like ETFs, exchange traded funds. Their AUM went from 150 million down to 80, but now it's kind of creeping back up. But when we invested in 2019, early 2020, it was, 1 million, right? Most people don't look at Vanguard or BlackRock as something that's super interesting. But for normal people, they're not really trading, right? They just want a simple strategy or an ETF or index type of product, so they can get a little bit more and get exposure and not have to think about it. Thanks.
Perfect. Thanks, guys. Thanks for me. That's it, guys.